Welcome back to the channel. Today, we're taking a detailed look at one of the most talked about projects in the crypto space right now, Astor. Whether you're a seasoned trader, a crypto enthusiast, or just someone trying to understand how emerging Layer 1 projects are shaping the market, this video is for you. We'll break down everything, from the current market position of Astor and its recent performance, to what the project is actually building, upcoming catalysts like its main net launch, and what traders are doing ahead of token unlocks. Plus, I'll give you a perspective on potential entry points, long-term outlooks, and key risks to watch for. And don't worry, we're covering this entirely as a narrative, so there's no need for charts or on-screen visuals. Just you, me, and the story of Astor. This is not financial advice. Please do your own research before making any decision. So let's get started by understanding exactly where Astor is today in the market. Right now, Astor is hovering around 70 cents per token. That's noteworthy because over the last few weeks, it has climbed sharply, up nearly 44% from where it was just a little while ago. To put that in context, many other parts of the crypto market have been relatively stagnant during the same period, so Astor's recent movement stands out. It's important to note that while this recent surge is significant, Astor is still far below its all-time high of $2.41, which it reached back in September 2025. That means from peak to present, the token has fallen roughly 70%, but the last couple of weeks show that there's renewed momentum. The project itself is no longer a microcap. With a market capitalization around $1.7 billion, Astor is firmly in the serious league of crypto projects. That size alone makes it noteworthy because it suggests substantial institutional attention, ecosystem development, and liquidity, things smaller projects often lack. The next big event to watch is the launch of its main net, officially scheduled for March 2026. This isn't some vague Q1 target or speculative guess. The team has set a concrete date. Having a fixed timeline is critical because it gives the market a tangible milestone to anticipate, and milestones often drive price and trading activity in this space. For those who might not be familiar, let's take a step back and explain what Astor actually does. This is key because understanding the product itself makes it easier to interpret the market moves and why traders are excited. Last year, Astor rebranded into a decentralized exchange focused on perpetual futures. Essentially, this means it's positioning itself as a highly liquid, infrastructure-focused competitor in the derivatives market. If you've been following the crypto derivatives space in 2025, you know that perpetual DEXs exploded in popularity. Saying they grew quickly is an understatement. To give you a sense of scale, cumulative trading volumes for the sector jumped from around $4 trillion to over $12 trillion in just a short span, with nearly $8 trillion occurring in the last year alone. These numbers aren't hype. They're quantitative metrics reflecting real, active usage. Popular perpetual exchanges now regularly see monthly trading volumes around $1 trillion, which demonstrates sustained liquidity and market adoption. Most projects would have launched on Ethereum or Solana, but Astor decided to go a step further. They're building their own Layer 1 blockchain. That's a major strategic move because it shifts the project from being just an application to becoming a full infrastructure provider. Owning the base layer gives them control over transaction speed, fees, privacy, and scalability, particularly critical for derivatives trading where every millisecond and basis point matters. Let's talk about the big event coming up, the main net launch. This is one of the most important milestones in Astor's roadmap. The testnet went live in early February, drawing over 50,000 participants. And just recently, on February 12th, the team confirmed that the main net is launching at the beginning of March, specifically March the 2nd, 2026. Why does this matter? Right now, Astor is a token operating on the BNB chain, which is essentially a host blockchain. Once the main net goes live, Astor will become native to its own ecosystem. This allows for much more flexibility, faster transactions, lower fees, improved privacy features, and optimized support for high-volume derivatives trading. The team has also outlined future plans for fiat on-ramps, governance mechanisms, staking, and even synthetic markets tied to real-world assets like stock perpetuals. This main net launch isn't just a technical upgrade, It's the point where Astor transitions from a token project to a fully fledged trading infrastructure with its own native capabilities. For investors and traders, that's a key moment to watch. Now, let's examine what traders are doing leading up to these events. After a market downturn on February 6th, Astor's open interest rebounded noticeably. What's important is that this wasn't just a low-volume bounce. Both open interest and trading volume rose together, which typically signals that traders are actively positioning themselves rather than passively holding. Spot inflows also turned positive, meaning new buyers were entering the market instead of just shorts closing out positions. Trading volumes recently showed $775 million in futures, $96 million in spot markets, and $325 million in open interest at one point. There was even a day where Astor's DEX processed over $3 billion in derivative volume within 24 hours, briefly ranking above some of its competitors. This activity suggests that the price movement isn't just speculative hype, it's backed by real trading demand, which is especially impressive given the token unlock event approaching. Speaking of token unlocks, here's something that could affect market dynamics over the next few days. On February 17th, about 78.5 million Astor tokens will unlock, representing just under 1% of the circulating supply. Historically, token unlocks can cause short-term volatility. Sometimes prices rally in anticipation, only to experience pullbacks when tokens actually hit the market. Staking, which could help absorb some of this supply, is delayed until Q2, meaning these newly unlocked tokens won't immediately have yield incentives. This could generate short-term selling pressure. Analysts are generally bullish on the long-term outlook, but the immediate few days could see choppy price action due to this supply shock. So, if you're thinking about entering, it's important to consider this timing. Jumping in right before an unlock might expose you to unnecessary risk, while waiting for a dip around this period could present a more strategic entry. Zooming out, the broader narrative for perpetual DEXs remains one of the strongest growth stories in crypto. Hyper-liquid exchanges have demonstrated the value of purpose-built blockchains optimized for derivatives. Astor is trying to replicate this model, but with its own infrastructure and ecosystem. If the decentralized derivatives market continues to expand at the rate it did in 2025, having a dedicated Layer 1 optimized for high-throughput trading is a massive strategic advantage. Infrastructure-focused projects like Astor tend to attract capital even when the broader market sentiment is cautious. And that's exactly what we're seeing. While many altcoins have struggled recently, Astor has shown relative strength, moving from around 40 cents to 70 cents in just days, even as overall market sentiment remained negative. This suggests that investors are rotating into projects with strong narrative and tangible infrastructure rather than speculative or meme-driven assets. For those paying attention, that shift is very telling about the kind of capital entering the crypto ecosystem. For short-term traders, chasing price immediately before an unlock is generally not recommended. The risk of volatility is high. A more conservative approach would be to wait for potential dips in the 55 to 60 cent range following the unlock on February 17th. That could represent a more favorable entry point for medium-term holding. Looking further ahead, the real validation comes in early March with the main net launch. If the main net goes live smoothly and trading volume remains strong, revisiting levels like $1.20 to $1.40 per token becomes a realistic possibility. Should adoption accelerate and derivatives trading continue growing in 2026, even reclaiming the $2 mark or beyond is within the realm of possibility. Of course, nothing is guaranteed. Astor is a high upside play tied to one of the strongest narratives in crypto right now: infrastructure for decentralized derivatives. Execution, adoption, and market behavior will ultimately determine how far it can go. To wrap things up, here's what we've covered today. Astor is currently around 70 cents, up significantly in recent weeks, but still below its all-time high. Market cap is around $1.7 billion, making it a serious mid to large cap project. The main net launch is scheduled for March 2nd, 2026, a critical milestone for traders and investors. Astor is building a dedicated Layer 1 blockchain focused on high-volume derivatives, with upcoming features like fiat on-ramps, governance, staking, and synthetic markets. Trader activity has been strong, suggesting real interest and positioning ahead of key events. Token unlock on February 17th could create short-term volatility, so timing your entry is important. Long-term upside depends on successful execution, adoption, and market expansion, with potential for the token to reach $1.20 to $1.40 or even 2 plums if momentum continues. Astor represents a compelling intersection of narrative-driven and infrastructure-focused crypto projects. While short-term volatility is likely, the long-term growth story is very interesting for anyone paying attention to the derivatives and Layer 1 blockchain space. Thanks for watching. Hit like and subscribe for more daily crypto insights. Catch you in the next one. Stay crypto smart.